Okay, welcome guys. It is Tuesday night, September 2nd, in preparation for Wednesday, September 3rd, trading day. We're gonna, before we jump into the weekly charts here, the daily charts and stuff like that, we wanted to continue with the Roy Longstreet's Viewpoints of a Commodity Trader, chapter, I don't know what chapter it is, but it's Trading the Fundamentals. Um, chart trading is interesting. Hang on. Ben. Chart trading is interesting and will keep you alive in a world where few traders survive. But the objective in trading is to make profits and to make them big when there is opportunity to do so. Trading the fundamentals, armed with a thorough knowledge of what they are, is the key to the big profits. Most traders who depend upon their own knowledge and interpretations of fundamentals do less well than those who trade on charts. Too many pure fundamentalists are underschooled and ill-equipped. Like most men, they think they know more than they really do. They have difficulty in separating fact from rumor. Human nature works against the fundamentalist. We all like to be right. It is difficult to admit error. The secret to successful trading is cut your losses and let your profits run. He who trades on fundamentals too often hangs on when he is wrong and takes big losses. The commodity market is no place for heroes. A fatal mistake made by the fundamental trader is to take small profits. This, I feel, is the result of limited vision. Extremes always seem silly to men of so-called good judgment. Successful trading on fundamentals is difficult, but not impossible. Few men have climbed Mount Everest, but it has been done. If one will pay the price, one can accomplish the near impossible. The price in this case is to spend one's time on learning more and more about less and less instead of dissipating one's energies by learning less and less and about more and more. In other words, the answer lies in specialization. This is a full-time job. You are working towards precarious heights where a little learning is a dangerous thing. Knowing something is not enough. It's the thing that you learn after you think that you know it all that is important. You must know it before it is discounted in the market, and you must not know something that is not so. For most traders, the answer lies in seeking help from someone who specializes. The wisest men are those who know and know that they know. All right. Next one is chart trading. Chart trading. We had a successful wrestling team at the university. Charlie Mazer taught us well the use of a few simple holds. Our competitors often knew many more tricks, but we won. When I think of the chart trading, I am reminded time and time again of the principle. Shoemakers, stick to your last. Shoemaker, stick to your last. There is so much valuable information that a trader can observe about the current situation in any market by keeping a complete set of charts. Such information includes the following. Is the market active? Is a significant formation or pattern developing? Is liquidation or accumulation occurring? Is the trade or the public dominion in the market dominant in, I'm sorry, is the trade or the public dominant in the market? This is only a partial list of the important information a trader can obtain daily by observing chart actions of price changes, changes in open interest and volume of trading, and changes in spreads between options and between commodities. There are some real advantages to the use of charts in trading. These include timing entries and exits, limiting your losses, maintaining your position in the big move, keeping part-time traders appraised of general price trends. There are also some real disadvantages to the use of charts as the only tool in trading. Those who depend upon charts have difficulty appraising value. Most are downright poor analysts. Many do not think it possible to analyze the market correctly. Some are content with success based on chart approach and will not make the supreme effort required to accurately appraise value. It is not possible to carry large positions on the basis of chart actions alone. There is a limit to what the market will take on any day. Quite often, the market is temporarily thrown off course by those who trade on chart actions only. Those who trade solely on chart action should be prepared to take many losses and a few profits. If properly managed, this can be profitable, but is psychologically difficult. Kind of what he's saying between those two is fundamental analysis by itself does not do it. Chart by itself does not do it. You need to kind of combine both. Matter of fact, the next chapter, charts plus fundamentals. I'll finish this last one here. I'm often asked, are you a fundamentalist or a chartist? If it is as if east is east and west is west. For most traders, this is true. It need not be. There is merit in merging the two. Life in the country is rough at times because it is real. The lessons learned are not soon forgotten. One truth observed on a dark night in the rough terrain surrounding our Twin Echoes country house has helped me to understand the necessity for merging charts and fundamentals. Our family, including the children, were on a hill across the creek from the lodge. Each step along the way was rough going. At some points, it would be necessary to reverse our direction to avoid trees and large boulders. In the darkness, we could see the lights in the lodge, our ultimate destination. To find our way past trees and boulders and across the running water, we used flashlights. Now I understand the function of fundamentals. They are like the beacon light in the lodge. I also understand the function of chart actions. It is like the flashlight that we needed that dark night to avoid bumping into trees and boulders and to keep from falling into the creek. The market is a very tough, complicated, competitive business. Easy money is hard to come by in commodity trading. A fair degree of success calls for a fair degree of study and hard work and understanding of the market. Thoroughness and quality count for more than speed in the long run. The fable of the hare and the tortoise reminds us that the race is not always to the swift. Chart trading is apt to develop a tempo too fast for one's temperament. We need to pace ourselves in our trading activity. Trading only when you have a good reason based on an appraisal of fundamentals and using chart actions for confirmations and timing of entries and exits. I'm going to pause right there. I like that. So, like the green whack-a-mole zone, the fundamentals, actually, I don't know what caused that. We were reading it in the internals. The internals were predicting that we were due for a downturn in that. We went up, failed to have continuation of the upside, and started failing. Like I said, the internals, the VIX were painting that picture. Then once the market started moving that direction, we kind of had confirmation of that, and then all we need to do is confirm our timing of our entries and exits to hit some of those plays. So anyway, timing of entry and exits will help to give satisfaction to your feeling of accomplishment and contribute significantly to your economic welfare. All right, that's all we have for tonight. We'll pick back up on your broker in tomorrow night's video. Okay. Don't have a whole lot to go over on my notes here tonight. That's why I went ahead and read that extra chapter there. I did want to show you here on this weekly basis. We've left a handful of buying tails. This had some buying tail here. It also had some selling tails up here. Had a little bit of selling tail up here. Big buying tail here. We came back up, and instead of continuing up, so far this week we've continued on back down. So it's just interesting to me on that we get rid of these. You can't see those tails when I circle that. So we came down here on today, basically is all I count today, but I wanted to show those buying tails there. And also as a reminder, our weekly picture, we went over that last week at some point. Kind of the historical tendency in September was a little bit down. So this is the last week of August. Here already in September, we've already come down pretty good little chunk here just in the last 2 days, yet combined between Friday's close and then today's price action. So keep that in mind with September's bias, kind of a little bit of a negative to break even bias overall for the month of September. Wanted to show on the thought this was interesting on the 1440 minute on the ES. We did have this is a 50 period, the Fibonacci retracements. That's one of our things over here. Yeah, no, that's cycles. One of these retracements, one of these are the Fibonacci retracement lines. But this is based off of the 50 period. It's kind of our default setting. I've had that on my daily as just a point of interest. We hit off that back here on the beginning of August. Kind of came up, and now we just hit off it again here at the beginning of September. Hit off that. So just kind of an interesting point that we came down almost to the tick to that line, and then bounced off it. So, all right. So I wanted to show the SPY. So on the SPY here, we can see if I can zoom in here. So on the SPY here, we had the 3 bar. We broke down to the downside of that 3 bar. And I thought, okay, hey, yeah, we're going to have a little bit of continuation, come back up here, maybe bounce off and do a second leg down. Instead, we went back up. We tipped above the high of that 3 bar, took out the upside, yet there was no follow through. So we took it out to the upside. This is a daily chart back on 8/28. So that was what, Thursday? Was that last Thursday or 28th? Yeah, Thursday was the 28th. So Thursday was 28th. Friday, we had that down day. Again, if you remember, we were seeing those VIX divergences, and I'm like, hey, it's short again. So we went short. We did leave a nice little gap here. So that's interesting. So we got a little upside gap that could be trying to work into tomorrow. But what I'm looking at is this overall. We had this 3 bar, a breakdown, moved to the upside, failed to hold that upside move, and instead broke down pretty hard back here. So, we could, if we hold this pocket, we could make another run at this upside. But that's showing some pretty good weakness as far as what I'm seeing there on that pattern. Also on the internals, wanted to pull this up here. So one moment here. So on the VIX here, we've did quite a extended move there. So are we going 3 points up or down? So this from again, this is the 28th on Thursday's low. 3 points up from the 1412 is up here at 1712. So we closed right about that point. We closed at 1717, and that's 1712. So bearish would be 3 points up. Well, obviously we spiked up there quite a bit today. Well, from today's high on the VIX at 1938, 3 points down from that is down at 1638. So again, we closed right here. If we stay above this 1712 line, that bodes more bearishness. If we get down here below the 1638, it could bode more bullishness, because then that's 3 points off of this top spike back down. So it'll be interesting to watch the VIX in relation to those zones there, just see where we are in relation to today's move. The other thing I wanted to show down here on the SPY is, remember, we've been kind of tracking that channeled move up. Well, you can see that we're right at the bottom of that channel. Matter of fact, we broke down the bottom side of that channel a little bit today, and then ended up closing back up into the bottom side of that channel. So that does give us a lot of room to move back up to the top side, should it choose to do so. However, if we're showing additional weakness, we could break down out of this channel for now. I do. Well, I know it's yet another day. I do have tomorrow as a potential sell day still. But I have a zone. Where is Give me one moment. Let me pull that up here. Okay. So on this here, I have my short-term pivot up here at 64, 35, 75. And right now, we are at 64.33. So we're right around that short-term pivot. Like I said, right now I have that as a still a sell signal here. But we could move back up and turn that into a buy signal. All right, so that's about all I have here. Keep in mind we're at the bottom of this channel. You know, we have some room to the upside. But that pattern where we come up, start to break down, come back up, make a false breakout to the upside. And then this, you know, if Buddy was looking this on his 2000 tick chart, I don't know where he would see the second entry short at on this, but I would definitely be looking for a second entry short to off this false breakout to the upside. So that's it. All right, guys. Tomorrow's Wednesday. Let's trade safe. Happy trading tomorrow, and we'll see you in the room. Talk soon.